One of the most frustrating moments in trading is being right about the direction and still losing the trade. You analyzed the chart. You waited patiently. Price reached your support level. You entered the trade. You placed your stop loss. Everything looked perfect. Then the market moved just a little lower. Your stop loss was triggered. You accepted the loss. A few minutes later, price reversed. It rallied exactly where you expected, without you. So what actually went wrong? Was your analysis wrong? Was the support broken? Or have we been thinking about support and resistance the wrong way all along? In this video, we're not just going to learn how to draw support and resistance. We're going to understand why these areas matter when they don't and how professional traders really think about them. Let's start with a simple question. What is support? Most traders would say it's a price level where buyers step in. That answer isn't wrong, but it's incomplete. Think about it. The market doesn't know where you drew your support line. It doesn't care about your indicators. It doesn't care about your drawings. So why does price react there? Is it because of the line? Or because of the people trading around it? Support is not created by a line. The line is created because of support. And those are two very different ideas. What you're looking at is not a magical level. It's an area where buyers, sellers, trap traders, and breakout traders all make different decisions. That's why price reacts. Let's forget the line for a moment. Imagine there is no support, no resistance, no indicators, just buyers, sellers, and price. Every movement you see on a chart is the result of decisions. Someone believes the price is attractive. They buy. Someone else believes the price is too high. They sell. The market moves because these decisions compete with each other. But sometimes something changes. A certain area starts attracting attention. Buyers become more interested. Sellers become less aggressive. Demand starts becoming stronger than supply. And price reacts. Not because of a line, but because of the decisions happening around that area. This is where most traders misunderstand support and resistance. They think the level creates the reaction. But the reality is the opposite. The reaction creates the level. We don't draw support because we expect price to react there. We draw support because price already showed us that buyers were willing to defend that area. They start with a question. What happened here? Who was making decisions here? And why did price react? The line is only a way to visualize the story. The story itself is what matters. Now that we understand what support and resistance really represent, the next question is simple. How do professional traders find these areas? The answer is not by drawing more lines. In fact, most beginners make the same mistake. They look at every reaction. They mark every high. They mark every low. And soon their chart becomes full of levels. But a chart full of levels doesn't create more opportunities. It creates more confusion. Professional traders do something different. They search for areas where the market made an important decision. Not every reaction matters. Some reactions tell a story. Others are just noise. So what makes one area more important than another? There are a few things we need to understand. First, how strongly did price leave that area? A strong move away tells us something important happened. Second, how clear was the reaction? A level respected by the market is usually easier to see. Third, where is this level located? A level in the middle of nowhere has less meaning. A level connected to market structure has a story behind it. Remember, we're not searching for perfect lines. We're searching for meaningful decisions. Now we need to answer one of the most important questions. If a support or resistance zone represents an important decision area, why does price sometimes break through it? The answer is simple. A level is not permanent. It is a reflection of current market conditions, and market conditions can change. A support zone that worked perfectly before can become weak over time. So what makes a level lose its importance? The first reason is repeated testing. Every time price returns to an area, the orders around that area are being consumed. A level that survives one test may not survive 5 or 6. The second reason is momentum. When strong buying or selling pressure enters the market, price can move through previously respected areas. The market is not respecting your level anymore because the balance between buyers and sellers has changed. The third reason is context. A support level in an uptrend does not have the same meaning in a changing market. Location alone is not enough. You need to understand the story around it. Professional traders don't ask, will this level hold? They ask, what evidence tells me this level is still important? Now I need to understand the most important part. Why do these areas matter in the first place? The answer is simple. Because traders are watching them. Support and resistance are not owned by one trading style. Almost every trader knows these concepts, even if they use a different name. Some call them support and resistance. Others call them supply and demand. Some traders use order blocks. Others use key levels or market zones. The names are different, but the idea behind them is often the same. They are areas where many market participants make decisions. And when many traders are watching the same area, that area becomes important. Think about a support zone. Some traders are waiting to buy. Some traders are closing their short positions. Some traders have stop losses below that area. Others are waiting for a breakout. All of these decisions exist around the same price. And when price reaches that area, the market reacts to those decisions. This is also why a broken support often becomes resistance. The reason is not magic. The reason is psychology. Traders who bought at support and got trapped may want to exit when price returns. New sellers may see the same area as an opportunity. A previous buying area can become a selling area because the expectations of traders have changed. This is the real story behind support and resistance. It is not about a line. It is about collective decisions. And once you understand this, the chart starts telling a completely different story. Now, let's bring everything together. A beginner usually looks at support and resistance with one question. Will price bounce from here? But professional traders think differently. They don't try to predict a reaction. They analyze the probability behind that reaction. Before taking a trade, they ask better questions. Where is this area located? What happened before price reached it? Who is currently in control? Is there evidence that buyers or sellers are actually reacting? Because a support or resistance zone by itself is not a trade. It is only a location. The decision comes from the story around that location. A strong area with no confirmation is still just an area. But when location, context, and confirmation come together, that is where probability starts improving. Professional traders don't enter because a line exists. They enter because the market gives them a reason. After everything we've discussed, there is one final idea you need to remember. Support and resistance are not powerful because they are drawn on a chart. They are powerful because thousands of traders make decisions around them. The market does not move because of your lines. Your lines exist because of the decisions made by the market. This is why two traders can look at the same chart, see the same support zone, and make completely different decisions. One trader sees a simple line. Another trader sees a story about buyers, sellers, fear, confidence, trapped traders, and changing expectations. The difference between them is not the chart. It is the way they understand the chart. So the next time you draw a support or resistance zone, don't just ask, where's the level? Ask better questions. What happened here? Who is making decisions here? Why did price react? Because professional traders don't memorize levels. They understand the story behind them. And once you learn to read that story, the market starts to make sense.